afternoon, financial professionals. My name is Brendan Derone. I'm Chief Distribution Officer and Managing Partner here at E4 Insurance Services, welcoming you to another edition of the BREW, building relationships every week. Thanks for tuning in. For those of you joining the BREW for the first time, we like to start the BREWcast by celebrating today's national days. So we have National Hot Chocolate Day, Inspire Your Heart with Art Day, and Backwards Day. So I like to try to tie these all together, and I would say that maybe you should get a hot chocolate with a heart-shaped, like they do in cappuccinos and lattes, heart in there, and then turn your mug around so it's upside down. And that'd be backwards, or not upside down, but backwards. So I think that ties them together pretty well. Mm-hmm. On today's BREW, I'm joined by Stephen Ally, Advanced Markets Consultant with Mutual of Omaha. This month, we kicked off our focused planning series with each month bringing you a new theme. And today we wrap up January's focus on business valuation. Stephen will review Mutual of Omaha's business valuation services and how it can set a producer up for success with life insurance and DI sales. Feel free to use the chat box to share your thought or ask a question. Also, all attendees are in a drawing for a CE voucher and Starbucks gift card. We'll be announcing the winner at the end. Thank you for tuning in. Stephen, thanks for joining today. I'll hand the mic over to you.
Well, thanks, Brendan, and thanks everybody for joining the call today. I appreciate the opportunity to talk to you about our business valuation service and how we've really seen some good results with people using this as a starting point for getting the discussion started, the business planning discussion started with the business owner. Some people have had good success even using this as a way of entering the business market. Maybe they haven't been working with business owners quite a bit, in the past. And this is a nice way. It's sort of a friendly, sort of a non-threatening sort of way to get the conversation started, and you're really offering the business owner a service. You're giving something of value. I know, as you can see, any of you that have worked with business valuations might recognize that this layout is Biz Equity. We do work with Biz Equity on business valuations, and I'm aware that we're not the only carrier that works with Biz Equity on business valuations. But I think we have some advantages as against some of the other carriers that I'm aware of that work with Biz Equity. One of the advantages is we can do valuations on businesses that show a loss. And now, you may not like the number, the business owner might not like the number we come up with, but we can do a business valuation that shows a loss. I know some carriers won't do that. We can also do business valuations on financial companies. We've done actually several for insurance agencies, and I know some of the carriers won't do that either. We don't have a minimum size. I think, my view is if you think they're worth working with, we'll work with them. Got to admit, I've had a couple where I felt like calling the advisor back and saying, you really think they're worth working with? But basically, if you think it's a business that's worth working with, we'll do the valuation for you. And we found, again, that it's a great way to get that conversation started. We also, after we do the valuation, we don't just send it to you and, that's it. We're glad to have a session, a Zoom session perhaps, where we walk through the valuation with you. If you want to present it to the business owner, we will even do a Zoom session or a virtual session where with you, where I can walk through this with the business owner with you. So, we're glad to help you with that part of the presentation. So, with that, for those who maybe aren't familiar with the Biz Equity valuation, this is the cover page, and yes, in fact, Brendan asked earlier, is Tasty Foods a real company? In a way, it is. Yes, it's not called Tasty Foods, but this is actually based on a valuation that we did a few years ago for a kind of a commercial, kind of an industrial food company. And so we rounded the numbers up a little bit and we changed the identifiers and all, but this really is based on a real case that we worked on. So as you can see, it's about a 29-page document. So you get the valuation, but you get a lot of other good information as well. And we've had a lot of business owners who, you know, like the valuation, but they thought, well, that's about the number I thought we were going to get. But this other part where they talk about the business ratios, what they call key performance indicators, that was more interesting to them sometimes than the actual numbers. But most of the time in doing evaluation, and at least in presenting evaluation to either the advisor or the advisor and the client, I'll talk a little bit about the pages, the first few pages, but I'll say, why don't we just let's go over to the page where the numbers are here, because that's probably what you're the most interested in anyway. And you can see they break it down in 4 different categories. Given the timing on the call here, I'm not going to go into a ton of detail on all of these. I think 2 of them are more relevant for what we do than the other 2. I think the 2 are the most relevant are the equity value, which is basically the value of the business with the owner in place. So if you're doing a personal net worth statement, doing estate planning, that would be the number you'd use. The other one that I think is more important for what we do is the asset sale value. That's the closest to what a third-party buyer is likely to offer. And again, these are very dollar-specific numbers, but these should all be understood to be within a range. So, that 3,117,260, yeah, it's probably anywhere between about 3 million and 3.25, somewhere in that vicinity. So it's, these are all within a range. Asset sale value is probably the closest to, for those of you who are familiar with, EBITDA, business valuation, that's probably the closest to an EBITDA. BizEquity has a proprietary method for determining it, but I've looked at several, and it's pretty close to what an EBITDA valuation would be. So that's probably the most reliable for what a third party buyer is likely to offer. So in addition to that, I'm going to go a couple pages over and start to look at the key performance indicators. And these are basically business ratios. And some of them are very common business ratios that most business owners are probably going to be familiar with, like return on equity. And you see Tasty Foods, this actually real industrial food company that we renamed Tasty Foods, doing pretty well as far as their return on equity. Some of the measures on here, and there are quite a few of these key performance indicators, but some of the measures on here may or may not apply because some of them are based on inventory. And if it's not an inventory-based business, there's nothing to show. Some of the others, may or may not apply depending on the particular situation. Some of them are receivables, if the business that really doesn't have receivables, But for the most part, these will give the business owner an idea of whether their business is doing better than the industry in general, doing about the same, or lagging the industry. And sometimes that can be a nice opportunity as well, because particularly on some of these where there seems to be a higher expense than maybe the industry, and maybe their nets aren't quite as high as the industry would be. We may not know offhand what that additional expense is, but if you raise that issue, the business owner might know. I can tell you something. I can tell you exactly what that higher expense is, and it might be an area that we can help them out in. It might be financial related, insurance related. So, one of the reasons that we do these, and one of the benefits I think of our doing this, is that I really think the business planning conversation can just flow naturally from one of these. I mean, obviously, if you've got 2 or more owners, I think the first thing that falls out is a buy sell. Because you're looking at the numbers here. I'm going to go back to the numbers page here. You're looking at the numbers and you say, okay, this is probably about a 3.2 to 3.4, 3.5 million business. You got 2 owners. Let's fund the buy sell. So that can be the first discussion. Another early discussion, I think, is key person, which, a key person, I think, is one of those concepts that everybody talks about, but I don't know. I don't see it in every business. And yet I know every business has a key person. I mean, the owner, and most of the businesses we're working with, very few absentee owners. The owner, if nobody else, is key. Usually there's somebody else that's key too. So that, I think, that discussion can come right out of this. Like, hey, what does this business look like if you're not here? Is there a business if you're not here? And wow, if there is, if you want some continuation on the business, maybe we need to put some cash, infuse some cash into the business in the event of your premature death to keep that operating. So hopefully that gives you some taste. And there are certainly the individual planning. I guess one more thought on the sale that can fall right out of this is a lot of business owners do a great job of reinvesting in their own business because, and a lot of them will tell you, hey, that's my best return. A lot of times that is a lot of times that's correct. That is their best return. But unfortunately, they set up these entities, these LLCs or corporations to limit personal liability. But then what they do is they put most of what could be personal income, personal money, back into the business where there is no limitation. If there's a claim against the business, that's all fair game. So I think another discussion you can have with a lot of business owners is building some wealth outside of the business that would be, they take some money out of the business, build wealth in their own name, like a personally owned income advantage IUL, where they're funding it for a supplemental retirement. I think that's a perfect way to build some wealth outside of the business. So with that, Brendan, I don't know if you had any questions or anyone else has any questions.
So I'll keep an eye on the chat box, but why don't you leave it here on this screen? Okay. I understand from your viewpoint that, through the asset sale value and equity value are most important, but I always like to bring up the liquidation value too.
Yeah.
To your point, if we don't do planning and the what if happens, as we are all in the insurance business, we know what if can happen, and they have to do a fire sale. They may be left with just the value of the equipment, and and liquidation value isn't even a fire sale. It's fair market value of that that equipment. So I like to highlight that as well as a difference. But I think to your point, and one of our focuses this year is, we say it all starts, with the valuation. So whether it be that, that buy sell, that key man planning, that, and I really like the point that you brought up with unlimited liability within the business. Yeah, it may have an LLC, but if the business gets sued, it's all there.
It's all fair game. Yep.
And setting up an IUL like Mutual of Omaha with a return of premium, you've got double safety nets there. So
right. Oh, exactly. And Brendan, that's a good point about the liquidation value. Quite often, if I'm presenting to the advisor and the client will say, "Well, I could liquidate for more than that," and I say, "Yeah, you absolutely could if you could take whatever time you needed to find the right buyer, sure. But if you have to sell right now, pennies on the dollar, and your expenses are 100 cents on the dollar. I mean, is it likely to get that bad? No, certainly if you do the planning, it really isn't. But could it get that bad? Oh, yeah. Oh, it could. Absolutely.
Well, and I think a lot of business owners know they put a lot more into it than that 515. So they think they should be able to, that truck cost me 60 grand. It's,
I should get
worth more than 20 that you've got there. Well,
right. Yeah.
Is it?
And that truck that I bought 5 years ago, I should still get 60 for it. Well, not quite how it works, but okay.
Yeah. Well, not seeing any other questions in the chat box. We'll move on. I want to make a note that we will have a follow-up email today with video and this case study on Tasty Foods, which again is not the real name, but the meat and potatoes of the valuation are still the same. So
an appropriate name
Uh,
for lunchtime, I guess, too.
yeah, there you go. Couldn't work out better.
Right?
Stephen, could you pick a number between 1 and 26, please?
Oh, wow. 1 and 26. Let's do 22.
22. All right. Our winner is Braden Mathern. I sorry if I
There you
butchered
go.
your last name. Braden, I pretty certain I got the first one right. So be on the lookout for a complimentary CE voucher and Starbucks gift card. It'll be coming your way from E4 shortly. So on
Cool.
next week's Brew, we have a special 30-minute webcast with Dan Lebert, Nalba CEO, to discuss the hot topic of the recently proposed updates on the DOL rule number 3, a personal non-favorite. These updates are specifically focused on annuities, insurance, and rollover advice, and directly affect our livelihood revenue. So, with that, there'll be an open floor question at the end. So, bring your questions. And in yesterday's Secure E for Life newsletter, we included websites on where you could advocate against these changes and make your voice heard. This is extremely important to our industry, and we urge you to get involved. Stephen, thank you again. And thank you, everybody, for your attendance. We'll see you next week on The
All
Brew.
right. All right. Thank you. Thanks, everybody.